Analysts pretty mixed on you doing this deal. What's your reaction to that, and why do you think this is something that was the right thing to do?
Well, I'm excited about this deal. I think this is an amazing deal for Okta, our shareholders, for Auth0, and I couldn't be more excited. So Okta is about connecting people with all the technology they need, whether it's employees connecting to their office work systems, or it's our customers' customers connecting to the websites and mobile applications that our customers build. And we're well on our way to being a real primary cloud in the environments of our customers, a cloud that they would spend tens of millions of dollars a year on, one of their strategic vendors. And what Auth0 does with us is it accelerates that journey. It gives the customer more choice. It gives the customer more flexibility, and particularly in the customer identity part of our business. Customer identity is about developers, and developers having the flexibility and the extensibility to do with the product exactly what they need. That makes customer apps be built faster. It's more productive for customers. And then when you combine that with Okta, it accelerates us to be in this primary cloud, which is really exciting for me.
There were concerns about the outlook. This from Deutsche Bank, saying the Auth0 acquisition has stoked fears the company is buying in growth to mask a decelerating core business. What's your response to that?
Well, the numbers speak for themselves. The core business grew last year, and we just reported fourth quarter earnings. The core business last year grew 43% in subscription revenue. And it's the revenue for the year was over $800 million. So this is a fast growing business at scale. And our outlook is we're being like we've done since the beginning of the pandemic. The pandemic, we're being conservative with our outlook. It's a global pandemic. We don't know how this is going to unfold. So we're running the company in a prudent way, being conservative in the outlook until the outlook really solidifies and we get vaccines and we get more kind of normal business activity. But we're very optimistic about the future while we're managing with this pragmatic approach.
And what's your take on the stock? I spoke with your old boss, Mark Benioff, last week, who told me years ago he stopped watching the ups and downs, and he would tell any public company CEO not to look at the stock. What's your strategy?
It's hard. It's hard. I mean, you try not to look, but we all look at it. I mean, we don't like the stock to go down. We try not to get too excited when it goes up. We try not to get too excited when it goes down. And I think one thing is clear: if we can fulfill our vision to enable anyone to safely use any technology, and we can do that by building an awesome product and platform for customers with a great team over the long term. I mean, the people say this a lot, but this is the right way to think about it. Over the long term, the stock is going to take care of ourselves. This is a big market. I mean, we're in a $50 billion plus TAM with workforce identity, $30 billion TAM, customer identity, $25 billion, growing very fast. These are big TAMs. So if we execute and we build this amazing set of choices and products for customers, the stock price will take care of itself.
That said, there's increasing talk about potentially a correction, especially in tech, or are we seeing the start of a bubble bursting? What's your outlook?
Again, it can be distracting. I think, we try not to look at the stock, but we look at the stock. We see what's going up and down. But we just think about, these big markets we have, and we think about the customers, and every company in the world, every organization has to do more with technology. Valuations will go up, valuations will go down, but it's an inalienable trend. Every organization has to do more with technology. That means more apps, that means more infrastructure, that means more security, that means more identity. And we're in a very fortunate position that we can provide that key layer that powers all of these experiences. So over the long term, we're going to be in a good spot if we keep executing.
Meantime, I know you've been following the SolarWinds incident closely. There's a lot we still don't know. What are your biggest concerns, given that, as you say, the tech industry is only going to explode even more over the next several years, which makes us all even more vulnerable?
Well, I think, every breach we can learn from. And I think this one is no different. I think one of the biggest learnings from the SolarWinds breach is that there was this mindset in the past that if a company managed all their own software and all their own infrastructure, it could somehow be more secure. And now what we see, like a lot of things in technologies, there's risks with every approach. And it's about what's the best approach for a customer to get that risk lowest as possible. And for a lot of customers, that's why you're seeing this massive movement in the market that's using more cloud computing, trusting Amazon or Google for your infrastructure. And this is the concept of these primary clouds I've talked about. There's going to be 5 or 6 of these that emerge. And we think identity is one of those. We think identity has to be delivered as a cloud service. It has to be integrated deeply with all your technology and your other primary clouds. And that's the best long-term criteria for success for our industry and for customers and for security overall.